La escena del mercado y me parece que podemos saludar ya a Luke Newman, gestor de fondos de renta variable en Janus Henderson. Luke, hello, good afternoon. Thank you so much for attending us.
Good afternoon. Thanks for having me on.
So we're seeing that volatility continues to dominate the market. Do you think that we have already seen the floor, or will the falls continue?
I think more volatility to come. I think short term we've probably seen something of a bottom put into markets, but I wouldn't be surprised over the course of the year, given all these challenges investors are having to deal with at the moment in terms of inflation, events in Ukraine, central bank policy, liquidity challenges. I wouldn't be surprised if we then retested those lows later in the year. I think it's going to be a challenging year.
And what about the inflation problems? After yesterday's inflation data and today's data, what are the Federal Reserve next steps? Have we seen the inflation spike, or will Powell be more hawkish? What do you think?
Yeah, I think that PPI data you would have seen this afternoon, I think gave us some clues in terms of the likely path of inflationary pressures throughout the rest of this year and into next. The headline numbers were eye-catching. Finished goods there running at that 11% annualized number. So huge inflationary pressures that we're all aware of as investors, as consumers, and corporates are facing those challenges as well. But if you look beneath the numbers and look at what we call core PPI, so take out the food and the energy pressures. I mean, they're very real, of course, but if you remove them from the number and look at the underlying data, actually the increase month on month in inflationary PPI pressures was slightly lower. And I wonder if that's going to be the start of a trend. Looking forward, we're starting to see increasing evidence of demand falling. So households and corporates altering their demand decisions in the face of these higher prices, and almost creating a self-righting mechanism to bring that inflation pressure down. And if we see that trend continuing from here over the next few months, and it won't be immediate, and the energy pressures, of course, will last for longer, primarily because of those supply constraints which have been exacerbated by effectively removing Russia from that global supply. But we could then see a shift in markets. And I think you'll see that first in the bond market. It's interesting today on that high inflation number, we've actually seen a rally today in sovereign bonds. Now, I'm an equity investor, investing within an absolute return fund, but we keep a very close eye on the bond market. Often it moves ahead of the equity market. And to my mind, that would seem to be signaling that we may have seen or be experiencing the peak, at least year on year, in that inflation.
Mm-hmm. Okay. And do you have any kind of advice to our viewers in order to invest better in this volatility market?
Yes, I think the approach to investing going forward has to be very different to what's worked for investors over the last 10 years. We probably have seen that inflationary pressure beginning to ease, but a lot of other things have changed and won't revert again. We've been in an environment of huge liquidity. Obviously, the response from governments and central banks to the COVID pandemic was to increase that stimulus even further. Not only is that being removed, but actually we're seeing that excess liquidity beginning to be removed now. So the days, I think, of very low, structurally low interest rate policy with central banks prepared to step in on weakness has probably gone. So that support for equity investors of pre-profit technology type business models would seem to be gone as well. I think looking forward, I've got a checklist of the sorts of companies that I'm interested in buying on this weakness. I think we need to find companies that can grow in a recession or low growth environment. So you need an element of structural growth there. But I'm not talking about the super high growth technology businesses that have led the market over the last 10 years. Steady growers, but I'm really looking at other metrics as well. I think you need to show that you have a profitable business model, you have a margin structure which can increase with inflation, not come under pressure, so you can pass that inflationary pressure onto your customers. I'm really scrutinizing the balance sheets at the moment. So I think financial leverage and debt is going to be a very difficult characteristic at the moment. You know, I said we keep an eye on credit markets. The credit market is really under strain at the moment, and that's before the Federal Reserve has even commenced its quantitative tightening program. So we want net cash balance sheets, structural growers, and I think we've got to pay more attention to valuation. You know, the days of growth at any price have passed. So I wouldn't be looking to bottom fish amongst some of those NASDAQ companies that have been hit very hard. Instead, I'd probably be looking at European businesses with lots of US exposure, so benefiting from that stronger US dollar, that fulfill those criteria. So there will be opportunities. I think they'll be very different to the winners of the last 10 years.
About alternative investment. Do you think this kind of investment, alternative investment, could be an opportunity given this context?
It won't surprise me. It won't surprise you that I do, but again, I think you've got to be very careful. Absolute return and alternative investing, liquid alternative funds and assets are a broad church. There are lots of different funds and strategies taking a different approach. The requirement for them is very high at the moment, though. We've got equity and fixed income markets correlating, and both asset.
Okay, so Luke Newman, thank you so much for attending us. Have a nice day.